The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with us on this day. Yes, hello, Adrian, down in Adelaide. Good to hear from you. I hope you can see my screen all right, folks. Terry says good to go. Is the volume okay, Terry? Yeah, good to go. Volume good? Okay, so at the moment, I'm wrestling with you know, I I often say Elliott Wave is a virus. I'll have to add to that and say Microsoft is a virus. I've got 3 different versions of Microsoft on my computer, and the program's having a fight with itself about whether it's compatible or not. So, I mean, it's a pain in the you-know-what. Norbert, good to hear from you, my friend. Thank you. It'll be cold where you are, but getting warmer now, I guess, eh? So what does Megan say? I gave up being a princess so I could spend more time trade. Yes, thank you, Megan. Let me see who's here today. All our friends. We've got a good roll up today. Here we are. So, Adrian, yes, down in Adelaide. Albert up in the cold country. Andrew, Anthony down in Sydney. Good to have you with us, Anthony. Anthony's been having a fight with Trade Navigator about some of their new systems with their new processing provider. Vicky, lovely to have you with us, Vicky. We don't get many ladies. That's good to have you. Terry is here. Back to snow, says Norbert. Yeah. Rob over in New Zealand. Good to have you with us, mate. Having a holiday today. Good. Decided to stay home. Sounds good to me. Joel from Vero Beach. Good to have you with us, Joel. Let me see. Well, we're happy to have Terry with us. Sue up in Cairns. I hope you enjoy the Easter break, Sue. I hope your trading's fantastic. Stephen Scott's with us. Rolf. Rob, I've already said hello to. Peter, Norbert, of course, tutorial guide. Murph, the Murph over there. Good to have you with us, mate. Easter tomorrow. Michael Pell down there in probably Panama. He moves around a bit, you wouldn't really know. But good to hear from you, Michael. I'm glad you're with us. Larry, Kyle, Keith, the tutorial guy. Spoke to Keith during the week. He had some interesting stuff to say. Justin down in the Hunter Valley. Juan, John down in Coffs Harbour. Another John, Joel, we know about. Jeff. Jeff is a farmer. He's going to do a tutorial sometime, I guess. Is the photo Hong Kong? I don't know. Terry put these together for me, Anthony. It could well be. Our street's starting to look a bit more like that anyway. Yeah, Michael's in Panama still. Said that hot to warm here. Good. Juan, lovely to have you with us. Okay, John. Yes, lots of regulars and plenty of new people today too, which is interesting. Harold, my goldbug friend from Reading. I was talking about you, I think, in the last webinar, Harold. We were talking about gold. We'll be talking more about it today. Greg, he's in Colorado Springs. Great to have you with us, Greg. I love Colorado Springs. We've had so much fun there at the Broadmoor Hotel, eh? Graham and George, yes, we've got a big turn up today. Dean, I got your email, Dean. He's a gun trader. I'll get in touch with you. Chun's a new tutorial guy. He's over in Malaysia. Good to have you with us, Chun. Chase, the man who pressured me endlessly to give up smoking. So one of you wrote to me this week, I think it was probably one, saying you're over the age of 60 and you're a smoker, so take care. Well, thank you very much. I'm essentially a non-smoker now and have been for a few months. Am I feeling better? No, I think it's a good idea anyway. Bill down in Melbourne, I got your email, Bill. I'll talk to you. I'll send you an email. We can get together next week. We could. And Albert, of course, good to have you with us. Okay, greetings from the Great White North from Dean. We missed the what? The click in. What's the click in? Oh, that's from one of the two different. The clicking of the lighter. I haven't even got one here. Mrs. Needham still smokes, so there are plenty lying around the place, but not me. Okay, well, great to have you with us, folks. If you didn't hear me at the beginning, I'm having battles with Microsoft over various versions of PowerPoint, and I've had this big computer here for quite a long time, so there are various different versions on it. Here's Thomas up in the north. This is far north, Canada. Police are handing out fines here if there are 2 or more people in the vehicle that are not from the same household. Interesting times, yeah. Look, we've got the same thing here, and we're going to talk about it at length. So just bear with me if this program today is glitchy, and we'll do the best we can. Terry tells me it's all working okay, so let's hope that it is. Okay, so let's move on. We've got lots of things to talk about, haven't we? As I said, here we are. Bear with me if it's a little bit slow. It's a bit glitchy at the moment. We'll have to clear it out and start again before next week. Bravado and despair, I've called this. Well, they're really some interesting messages to learn, aren't they? So I know we're all locked down. I talked to Keith during the week. He made a very interesting point. He's fully sympathetic to everything that's happening, and he's not at all callous. He's a lovely gentleman. But he made the point that on average, 7,000 odd people die in the United States every day. Sounds fantastic, doesn't it? But it's a huge population. I mean, it's like 12 times the population of Australia in about the same landmass, although we have a pretty big chunk of desert in the middle. You do too, but not quite as much. And he made the point, so that's about 240,000 odd people die every month of natural causes. Well, natural causes include car crashes, shooting, various other catastrophes. But this whole coronavirus thing, it's actually not about the numbers. I mean, the deaths are terrible, and they're in terrible circumstances. And government has to do something. No government can survive this sort of damage to its population and not react. But all of us, or nearly all of us, my guess is, will be in lockdown of one form or another. And it varies a bit state by state. The same here, it varies state by state. But you know, at the moment, our rules here is you can, I want you to work this out for me because I can't. Our rules are you can go out if you have a purpose of going to a medical appointment, going to a pharmacy, or going to buy food. Yet all of the shops, the hi-fi shops and computer shops, there's a big company called JB Hi-Fi. You'll have all sorts of equivalent office work to all of them. They're open. And the crowds that were in them for the Easter sale yesterday, honestly, they make a mockery out of everything. But what we're interested in is the market and trading. And we've certainly learned some lessons yet, and most of it hasn't come out. But the first lesson we've learned is hedge funds don't hedge. Now, if this sounds like a crack record, if you've been with us long enough, this is just a rerun of 2007, 2009. And you heard Janet over in Canada. Good to have you with us, love. I hope you're feeling well. You heard all this before. You see, there's nothing new. There's nothing new under the sun. Really, they're just different iterations of the same thing. Hedge funds don't hedge. Money managers don't know how to hedge. Your money managers, you have pretty much a choice of them. Over here, in this part of the world, why pay taxes when the pension funds go backwards and government keeps bailing out those who need it and printing more and more money? That's from Rob H., who's a very, very good trader in New Zealand. And that's what we're finding with here in this country. We have compulsory superannuation, which is a compulsory form of saving. And a percentage is 9% is deducted from your salaries every week. And your employer matches that, and it goes into a designated superannuation fund. You have choices. but they're all much for muchness. The big difference is between the funds that are controlled by the unions, they're called the industry funds, and the retail funds that are mainly run by merchant banks, etc. As you would expect, the usual ghouls get into that very quickly. But the point is that the amount of compulsory saving money that these entities have been receiving is truly, truly staggering. I had a good friend of mine who went around. He's in Melbourne, which is the southern city, capital of Victoria, for those of you who don't know Australia. And he went around and he talked to half a dozen of these superannuation funds about a reasonably sophisticated hedging strategy, and they just straight out weren't interested. They don't know how to hedge, and they don't want to know how to hedge. And I have been screaming for 11 years that to protect yourselves, folks, you need to learn how to trade futures and forex. And this is just another classic example. In fact, it's so obvious when you see, if you go to the bottom of this page, one S&P E-mini, one contract only, following the Daniel Code trade signals from the high in February, which we call to the day and 1 point, has made $53,000 since the February high or thereabouts. That's just an S&P E-mini contract. You can gear that up as big as you like. The S&P E-mini has huge, massive liquidity. One contract's just not far short of just a standard joke, but I always quote one contract. So if you lose money on your stocks and shares, I'm going to say it's because you want to, but that's a bit too cruel. But it's because of your negligence, because and I don't mean you're people here at the Daniel Code. You're aware of futures and forex and how simple it is to protect yourself and your family. But to bravado and despair, I should add denial. Nobody seems to attribute any blame to anyone for the losses that are occurring, and they're massive. And I suspect they're going to get a whole lot bigger, but we'll talk about that as we go. I heard a Australian minister, or what you'd call a cabinet member in the US, very high ranking, saying, oh, the IMF didn't pick this downturn, and the ratings agencies didn't signal it. So, how can you expect that the people who manage your money would have been aware of these? It's a black swan event. It's totally unforeseen. Nobody could have foreseen this. All of those things are simply excuses for failure because they miss the point entirely. The point about trading is if you know how to trade, and I mean really know how to trade, and to that I would add there are very, very few that I've ever come across, apart from my own students. If you really know how to trade, you're with the market all the time, as you'll see when we go through some of these charts. And the whole basis of conventional institutional trading is about assumptions. They're all invested on the basis of whatever J.P. Morgan or Goldman Sachs or Nomura tells them, that this particular subset of the market is better, growth better than value, and value is better than growth, and B in staples and out of transport. I mean, all of those strategies that are sold to investors for massive sums of money are all based on assumptions. And when those assumptions are wrong, they get a hiding. And it happens to the best of them. Warren Buffett got caught with his huge shareholdings in airlines, which he dumped some weeks ago. But where he bought into them, I'm sure he did very well anyway. But how long do you let that mistake go? At what stage do you say, I should have another strategy? And I've been imploring you for 11 years. If you don't understand what I'm talking about, for goodness sake, please drop me a line, email me, and I'll be happy to expand on it. Yeah, Thomas up in northern Canada say all liquor stores here are considered an essential service. They are here too, mate, and boy, they get plenty of trade, don't they? So here's what COVID-19 is really showing us about markets, I think. What there is to learn is not new. It happens every time there's a substantial market correction, and that's what this is at the moment. This is only a correction, so don't get too panicked about things at the moment. Almost all institutional trading is based on assumptions about what the market or particular segments of those markets will do. And the boosters and media support this rubbish. I mean, this is a massive, massive industry. And its stock in trade is disinformation. Markets never go down. Long term, they always go up. Long term, very long term, yes, they do. And there are reasons for that, including a bit of clever engineering in the way the indices are constructed and what have you. But you're not going to live forever. There's going to be a time frame where you need access to your funds. And if you're in the wrong part of the cycle, bad luck. And the usual response to that is it can't be done. And it can't be done is simply code for I don't know how to do that. And that's the standard response. You couldn't pick that the market was going to have a correction. You couldn't pick that that was the time when it was going to have a correction. And market intermediaries, the boosters who make all their money out of people buying stocks and shares and get paid when they're selling their stocks and shares, they set this in concrete. And the institutional belief is so strong, it's just like a brick wall, trying to tell the average person that if you invest in stocks and shares, you don't need to lose money. It's like talking to a brick wall. Amazing. It just shocks me, but anyway, I'm shocked by a lot of things. Have a look at this, folks. The point I'm trying to make. This is the S&P E-mini, and back in February, 19th of February, we had the blue line trade. It was a TO3 and a blue line trade. For those of you who are new to us, we have different types of signals. The TO3 is the starting pack, if you like. And if you're interested in trading, that's a good place to start. You can have the most simple of easy exits, exit first, profitable close. It's a great way to do it. And then as you get more sophisticated, you'll be able to stay in trades much longer. For that, what you're looking at here is virtually, it's a combination of the TO3 plus signals, which is the blue line trades, and the TO3 trades. At that high was 4 ticks off it. 4 ticks, 1 point variance. Have a look at the low. We've talked about the high. Have a look where what happened with the low. Here's the S&P market. There's the low, which came on March the 23rd, and that low was 2174. The Daniel code blue line was at 2173. For those of you who don't know, these Daniel code members charts are released twice a week, every week. That blue line at 2173 has been on the chart for months and months and months. That doesn't mean the market has to turn at that number. It's just one of a number of numbers of support. But when the other criteria line up, it becomes a much stronger signal. And the strongest of our signals are the blue line signals. And there was a TO3 and a blue line buy at that low. It was the signals are posted 7:30 Eastern time in the evening every day. So it's not like we say, wait, we'll see the open, or wait, we'll see what it does. The signals are posted from the last bar, because the last bar tells you everything you need to know for the optimum signal to create. So there it is. That's pretty much straight off the success. We had a outside bar there where we lost money, got short, then got long again on the outside bar. Pretty well got that, most of that loss back today anyway. But this has just been the easiest trading. Big runs down, big money, couple of decent runs up. We're getting support for nice words, aren't we? But there it is. They're all posted. They're all in public. The charts are all saved. You can go to our website, the Daniel Code. You can click on Archive Charts. Go back to the 20th of February or even the midweek before that. You'll see that number of 3395 sitting there smiling at you. The same with this low of 2173. It's all open and disclosed all of the time. And there we are. Now, we're going to have a bit of a look today at some of the fourth seal stuff. We've had a lot of interest in the fourth seal, and I know there's a number of you who are really appreciating the commentary, which is done for us by a young Belgian gentleman called Frank DB, and he's actually a farmer, but he came to a tutorial that I was running, a Daniel Code tutorial in Taupo, New Zealand, back in 2010 or 2011. I'm not sure which. And he said to me, I've never seen a trading chart before. I don't know anything about it. But I liked your writing. He'd read some of my articles, and I'd like to learn. Well, look at him now. He's one of our very, very best traders. And as well as that, he took a particular interest in the fourth seal, which works on time cycles, time and price in the fourth seal. And he does this commentary for us. And it's, I've got to say, it's very, very good. So he must have had a good teacher. And I want to run through these markets that he does because we've had a lot of interest with people just wanting a bit of a longer view, and that's what this is for. And that's his chart, and these are the comments. And just follow these through. This is if there's a couple of little typos in here, I've corrected most of them, but don't let them worry you. Frank, as I say, is Belgian. And English is not his first language. He does very well, really, and I don't usually bother correcting them. You all understand that, or should. What he's been talking about these markets is quite extraordinary. Remember, though, that what he's analysing is 6-day charts, 12-day charts, and 24-day charts, which are the Daniel Code long-term charts. That means in a 6-day chart, each bar has 6 trading days in it. For a 12-day chart, each bar has 12 trading days in it. So you can't actually trade them because the risk on entry is too big. But what you should be doing is looking at, I'll move on while I'm yapping here. This is his comment on this week, which was posted on Monday. These are posted on Monday every week at our Daniel Code website. He's been absolutely spot on. He's been just terrific. What you'll see him saying there is you have to wait for the Daniel Code signal to pull you in. You have to have the daily signal where you can manage your risk to initiate these movements. But interestingly enough, he's still saying that he sees this market making a higher high next year. Well, I don't prognosticate that way, but he does. And those of you who probably saw his earlier analysis much earlier this year. And it's been terrific. Here's his view. This is the fourth seal. This is the long-term chart of gold. This is a 24-day chart, and you can see the 62 time cycle. The dominant Daniel Code time cycles are 44, 59, 62, and 70 for anything that's got the euro in it. And this is what he wrote. This was his comment on the last week, and he thinks gold would move higher. Might have another day or two of correction. I suspect the 59.62 cycle low is getting ready for pushing gold higher. When we take out the swing high, we'll know for sure. That'll be a strong buy signal. Well, that's been absolutely spot on, as you know, and as has the Daniel Code trade signals, which I'll show you later on. Here he is giving his up-to-date comment. Odds are gold will find, this was last Monday, odds are that gold will find even more support and even set up for a rally above the March high. Pretty good stuff, isn't it? So if you look at the fourth seal comment in the charts at the beginning of the week, that will set you up, and then to follow the Daniel Code daily signal to pull you in and out of the trade. 6S, this is our fairly newish program. It's a very fast program. It gives you signals every day. It gives you entries, risk management, and stops every day. And it's called 6S. This is gold, as you can see. We're with the market all the time. We're in the market almost all the time. I didn't put the buy signal on for today because we were flat, and I didn't want to be unnecessarily opening a new position before the weekend. Which reminds me, make a note, folks, the Russell is still on a fourth seal sell signal, as at the close of today's business. And there are sell signals also for the S&P, which means other equities. A lot of these markets are highly correlated. So gold is highly correlated with silver and with the HUI index, as a dollar sign HUI. And the HUI index is a index of 25 gold companies, gold manufacturers, gold producers, I should say, that don't hedge their output. So it acts as a proxy for COMEX gold and silver. And with equities, remember, they are so highly correlated that all US equities, Russell, Dow, NASDAQ, S&P, and Germany's DAX are so highly correlated that a signal in one can be executed in any other. So when we're talking about the S&P, we could equally be talking about the Russell, the Dow, the NASDAQ, or even the DAX. So bear that in mind when you look at the signals that we create. A signal in any of the equities can be elected in any other, can be executed, I should say, in any other, so long as it is elected. And same with gold and silver. You could take a gold signal, trade it in silver, or a HUI signal, trade it in either gold or signal. But you can see with the 6S, has kept you in that market, with the market, all the time. Practically, well, close enough to all the time, isn't it? There we are. So we had Florian asked me if I would have a look at the DAX. Let me see if Florian's here. I know that here he is with us. Florian, nice to have you with us. This is for you. This is what you asked for. And here's the DAX. And what you asked me was to have a look at it. See if I can actually bring up your specific question, Florian. Just bear with me 1 second. Here we are. And Florian asked, will I include the DAX in this presentation? Has it broken the trend line? Well, there you are. That's the trend line, which we stopped. That's the Daniel Code trading channel, the blue lines on this chart. This is the 24-day chart, Florian. Every one of these bars is 24 trading days. And we stopped extending that Daniel Code trading channel way back in April, May 2009. It's rather extraordinary how accurate it is that the market has continued to follow that pretty precisely. A little bit of overshoot of the highs, but overall it's been very, very good. But once you got the drama, now when drama and real volatility comes into markets, most market trading systems fail. The Daniel Code just gets better. The more the volatility, the more accurate the numbers are. Have a look at this. This huge plunge down in this correction, which is only a correction really. When you talk about trend, remember you can't talk about trend without talking about the time frame, because markets will usually have a number of different trends going on at the same time in different time frames. So if we look at the 24-day chart, which is our longest term chart, what we can say is that this market is correcting. It's not crashing. It went from a 1 standard deviation above the thicker blue line is the median or the mean. I think it's the median. It went up 1 standard deviation above that to the red dotted lines, or extensions of that level, and it went down 2 standard deviations from the mean, and that's pretty consistent what the American equities did. They went up 4. They were much more excitable. They went up 4 standard deviations, came down 5. So that's the same sort of thing. So there you are with the DAX, Florian. It's fallen on the shorter term time frames, of course. It's broken all of the trend lines. It's in a downtrend. But on the macro view at the 24-day charts, it's gone to the first place that we would have predicted it to go. In fact, it was better than that because you can see from the close of the last complete bar, not the little red inside bar, the bar before it, you can see that it closed almost exactly on 1 standard deviation down from the mean on the fortnightly chart. Fortnight means 2 weeks. I know it's a word I use it a lot. It's an English word, but not used much in America. So fortnightly means 2 weeks. Here we are. We're still on the DAX for you, Florian. So this is not correcting the major swing. Okay, I put a little light pinky-looking wedge on there to show you what it's correcting, and it's actually correcting the minor swing that goes into the 2009, 2012 low. That's a minor swing that's being corrected. That's very important because it shows you this market's still in a reasonably strong position, and the rally's gone to about 50%, as you'll see as we move on. So here it shows you more clearly the 2012 swing. That's what's being corrected. Once it starts correcting the major swing, which is right down to the 2009 lows, then there's something to really worry about. At the moment, I know it's dramatic. If you lost money in this, it's even more dramatic for us. We made money, had a wonderful, marvelous trading, and got everything, got the lot. So I'm not concerned, but I am concerned if you don't know how to trade. Do, for goodness sake, take this opportunity to learn how to trade properly, the Daniel Code way, and make sure, because don't believe this is all over by any means, folks. It's not. There's a whole lot more to go. A whole lot more to go. This is the next chart. Sorry, I should go back. Florian, I hope that tells you what's happening. That's the DAX, and we cover the DAX at the Daniel Code website. And if you look at members charts there, you can see the DAX daily is updated every Sunday and Wednesday night. And it's been good trading, hasn't it? All right, so let's move on. So far, the Microsoft presentation's holding together. This is for Juan. Juan is a client of ours who asked me to, interesting thing, he says, could you show me what a bear market looks like? Interesting, isn't it? Because most people would say, yeah, we're in a bear market already. But what Juan said is, can you show me a bear market? Because what are the conditions would be required for this to become a bear market? He said he's never seen a chart that shows anything but going up, speaking for the the S&P E-mini. Well, it depends how long you've been trading. Well, that was precisely my point, that if you weren't trading 2002 or 2000 down to the 2002, 3 lows, and then the 2007 to 2009, that was the crash. If you didn't see that, I guess you've never seen a downward-facing chart in the S&P. But have a look at this. This is what the trends are happening in this market. This is a 6-day chart of the S&P. And it's got on it a Daniel Code time cycle. This is the 59 time cycle, 59 period of each bar. That is itself a 6-day bar, to be specific. And way back in 2008 or so, when we first released the Daniel Code website to the public, we've been in this business for 11 years, folks, was sometime mid to late December 2008. As I recall, we went public with the Daniel Code website. and we had a 59 cycle high that went high to high into the 2007 top, and that was the crash cycle. The crash cycle is 59 on the 6-day chart, hop to hop, and it has to be on the first hop. In other words, it has to be on the first extension of 59 from the starting point, not a multiple of it. And that's why we got the low in March 2009 at 666. We were running I was running a tutorial in Taupo at the time. We had plenty of people over there who can testify to that. And we had 666 as a blue line, as a buy, strong buy, everything else. And if you want to ever remember some of the crazy things that were happening in those days, go to the articles tab at the Daniel Code website and scroll down until you find the article that says the number of the beast, 666, the devil's number. And that tells you about what happened. Amazing things happened, supernatural things in many ways that happened at that tutorial. It was wonderful. We had a lot of those Reading guys out here. Harold, you might remember, we had half a dozen of the fellows that you would know from Reading, from Bethel Church, were out here doing that. Terrific stuff. Okay, so that's how this particular cycle worked out. That same cycle didn't give us a whole lot all the way through. Then all of a sudden, bang, we're up to 9. That's 9 times that 59 cycle from its original starting point, and 8 from the 2009 lows, I should say. It gave us the high in February this year, the February high. Amazing stuff how these markets have the knowledge and remember. I mean, it's uncanny. So what's happening here, this is at the moment this is a classic correction of the minor swing. We know which swing it's correcting because when you use the Daniel Code numbers, the Daniel Code ratios for retracement, and we have a tool for that available, the numbers will go exactly to the correct retracement, which tell you which swing is then being corrected. So we know with a high degree of certainty that the swing that's being corrected at the moment is in fact the this swing in really, if you like, you could call it the Trump swing, couldn't you? This is this huge post 2016, early 2016 started rally up when Trump got the presidency. Extraordinary stuff. And that's what's being corrected down. We know that because we can see where that low is. And we had long-term support at the DC black line of the minor swing at 2179, which the market breached that and then ran away from it. And we had our Daniel Code blue line at 2173, which created a blue line buy, which we've been trading along with ever since. So pretty extraordinary. Look where the correction's gone to so far. If you look at the close, you can see that the close today was at 2787, and there's 50% of the major swing at 2785.75. Let's call it 2786, which is 1 point and 1 tick variance, 5 tick variance. A number like 2785 actually has 8,000 odd ticks in it, 4 ticks to the point in this particular market. So it's extraordinarily accurate, and a 50% retracement is just normal. It's just normal. But if we go out further, I think I did this for you, Juan. Here we are. You can see that it's also arguable that the S&P is now correcting the major swing. This is the 12-day chart of the S&P E-mini, which takes us all the way back to the March 2009 low. And you can see how precisely this market held on to the lower bound of the 1, 2, 3, 4, 5 Daniel Code standard deviations. They're not mathematical ones, they're special DC standard deviations down. And on the S&P index, it's actually even a little bit more precise. Excuse me. So we can argue, and look at this carefully, that the major swing is being corrected. Why is it I've just shown you a chart showing the minor swing being corrected and now telling it's the major swing being corrected? Well, we've actually changed the time frame. So you can't talk about any trends unless you specify the time frame. But the reality is that this happens with the Daniel code a lot, that you'll have a particular point on the chart that'll be a certain retracement of one swing and a different retracement of another swing, and they'll both coincide almost exactly. Why is that? Well, that's a pure function of markets, that all market movements are a fractal of a previous market swing. Okay? What appears to you to be random in these markets is not random. It's a market taking a fractal of a previous market swing. And we see that all the time, all the time, all the time. Have a look at this on the major swing. The number that the markets found for support, 218175, a couple of ticks underneath that on this chart. That's the 44% retracement of the whole bull market from 2009 up to 2019. And that's a very important number for the reason I'm going to show you. We move on and have a look at this chart here. And this is what a real bear market looks like. And this is, in fact, the 2007 to 2009 bear market in this same market, the S&P E-mini. If you hone in on the first retracement down that I put on there, which is the first retracement I put on there of this whole move from 2007 down to from 2002 up to 2007, you can see that it's got 0.445 next to it and the number 1222. That's the 44.5% retracement, which is one of the standard Daniel code numbers. And you can see what this market did. This is so important. I'm going to bring up a drawing tool type cursor so you can see. No, that's not the one I want. Here we are. This is the one I want. They call it Spotlight. It's this low right here, folks. This is about, looked to be about May, June 2008. And what you had there is you had a close below the 44.5% retracement. And that 44.5% retracement was the low that this pullback, current pullback in the S&P, the COVID pullback, if you like, has made. So we've rallied from there up 50% from that low. But if we get a close below that number, which I was just showing you, then you can expect for something similar to happen as happened on this chart. There was the close below the 44.5, which is not of itself a fundamental. It's just on its way to 50, isn't it? And then it rallied for weeks and weeks and weeks. And then when it went down, that was it. That was the party. It was all over. And that was sort of the jumping out of the top story business as it fell for those people who didn't know how to hedge or to trade. So that's what a real bear market looks like. And we don't have that yet, Juan, but you know what the ingredients are to get it there. So a further downward move, and that's what will happen there. Okay, let's move on. So here's a thought, folks. Don't get hung up on equities. We spend a lot of time talking about equities because they're the big bazooka at the moment, together with T-bonds. But margins for equities are getting way up there. They were roaring before this latest little bit of drama, and that's why the exchange brought in the new micro contract, because the margins were getting up from, used to be about 3,600 to 4,500. They were getting up to 6, 7, 8, 9,000. Well, the margin for the S&P E-mini now is up over $14,000, and all these volatile markets the margins are well up, and they're designed to be well up because don't ever forget the exchanges are essentially owned by the brokers, and I don't mean the introducing brokers, I mean the major brokers, and the exchange is always acting in the interest of their owners and their clients, who are the brokers. They're not making rules for you or me. They're making rules to protect the brokers. So the way that the calculation of margins work, it goes up very quickly on the first sniff of volatility and takes an awful long time to come down. But Forex and commodities are trading, great trading opportunities there, which we post signals for every day. Energies are great with plenty of volatility, but the margins on crude oil are way up there, and it's a bit emotional for some people, particularly over the weekend. Grains are trading really well. Wheat's been a good market for us. And then there's coffee and sugar on the ICE exchange. Don't forget the other grains like soybeans. They're great trading opportunities. If you're going to get stuck on equities, I suggest really that you have a look at the Russell 2000. Its margin is elevated now as well, but it's a fraction of the other markets, which is, and in my view, I think it's a more rational market. It seems to have less noise around it. Okay, so remember what I told you, these equities are on a sell signal for Monday. Here's the fourth seal. Frank DB covers S&P crude oil and COMEX gold for us. These updates appear every Monday. It's not listed, the price is not listed as a subscription for some technical reason that Terry could explain to you, Terry runs the website for us. You will, if you're interested in subscribing to those markets, I know a lot of you have been following Frank's work lately. If you're interested in subscribing, just send Terry an email, please, support@thedanielcode.com. Tell him you want to subscribe to one or more of those markets. He will invoice you, and if you decide to subscribe for more than a month, for a longer period, 3 months, 6 months, or longer, he will offer you a discount. So be careful, folks. This is a nasty thing going around, this disease, and also be really careful with your trading. Some of these markets can be savagely volatile. Let me catch up on some words here from our guest. Here we are. Harold, Mr. Goldbug from Reading. True. Daniel Code called the 666 low. Wonderful. Thank you, Harold. I knew there'd be someone who'd been with us long enough. There are not many of us left now, but there you are, folks. If you think I make this stuff up, there's Harold, who lives in Reading. Lovely gentleman. Very kind of me when I was over there. 5 standard deviations. Never before on the 12-day chart, says Juan. That's right. Thanks, gets that, makes you happy. Great, thanks. Okay, Juan has got all of that. I've answered all of that. And John down at Coffs Harbour, E-mini, the mini contract in crude is a good one. Okay, I have never traded that, but John's a very competent trader. John L. down in Coffs Harbour, he's done tutorials with me. He's a lovely guy. I know him well. If he tells you the E-mini in crude is a good one, have a look at it, folks. That sounds really important. Let me see what else we've got here. We've got a question here from Jeff. Oh, he was on one of the Princess cruise ships. Lord, this is a good client of ours. Let me see if I can just get this machine to let me read what he said. This is from Jeff. He's a very lovely guy. He's been with us a long time. Trading's been interrupted a bit. The cruise my wife and I were on one of the Princess cruise ships is in the news. We quarantined in our rooms at sea, then in Oakland for several days, and then we were moved to a U.S. air base in San Diego for several more days before getting flown home to spend even more time in quarantine in our house. We are, however, healthy and well and better for the experience. I'll give you a detailed email about the questions that you raised there, Jeff, but happy to hear you and your wife are in good health, and you seem happy enough. You're a very tolerant man. Well done. Okay, so folks, if you want to, now's a great time. You've got time on your hands in lockdown. I can assure you this doesn't end here with these markets. This is going to go on and on. Markets go on forever. And these sort of events happen. And if you don't know how to trade, you are to trade futures and Forex, you are cutting yourself off from an enormous opportunity. So if you would like to learn how to be a super trader, email me, jneedham@thedanielcode.com. I'll be happy to call you. We can have a phone conversation, talk about your trading, what your aims are, what your options are, and get you set up. So let me know if you're interested. I'll send you some material to read, and we can go from there. Okay, let's see. This is the one I think that no, it has moved. Here we are. If you haven't already had a free trial, folks, you're most welcome. Just go to the Daniel Code website, click on the free trial link, follow it. Any problems, email terry@support@thedanielcode.com, and we can also arrange a trial of Trade Navigator for you if you haven't had one already. It says on the right-hand side, free trial to Trade Navigator. It's no longer free. They give you a modest fee, and I'm pretty sure I remember Glenn said he'll give you your money back if you're not happy with it. But I've been using Trade Navigator for many, many years, and I've been a partner with them since 2009, as you'll see on the website. If you go to their website, click on Educators, the good-looking guy in the offshore sailing gear is me, on a halfway to Hobart, on a Sydney-Hobart yacht race. Admittedly, it was taken a few years ago. I'd love to be there again soon. All right, I think that's all, folks. The final slide, which has finished up working for us all the way through, is the compliance statement. And as I tell you, for goodness sake, please, I beg of you. Oh, Eric's with us. Eric Trotter, good Lord, a voice from the past. Great to have you with us, mate. Terrific. And David as well, David E. Yes, I know who you are, David the Third. My goodness, there's another voice from the past. We've got a lot of people catching up with us. I guess they're forcing you to stay at home and out of the bars and out of the football or basketball or whatever it is you normally go to on a Thursday night. Great to have you with us. Anyway, I do beg and implore you, do not risk real money trading until you are quite confident that you're pretty competent at it and you know how to trade. It's very easy to start trading. It's real easy to lose all your money really fast. That's what markets do to you if you don't know what you're doing. So I beg if you take that compliance statement seriously. Okay, and that's about it, folks. That's us for the day. Do have a pleasant Easter. Tomorrow, of course, is Good Friday, the day we remember Christ's crucifixion, and he died for us. And Easter Monday, of course, is the day of happiness when we rejoice about the resurrection. But markets don't think that way. They're going to be closed for Good Friday, and they're going to be open on Easter Monday. So you need to be on your toes Easter Monday after the long weekend. And we'll have more great trading. The success signals will be posted on Sunday night as per usual for Monday's trading. That's it, folks. Thank you for being with us today, and do email me, jneedham@thedanielcode.com, with any questions you have or any comments. I'll be only too happy to talk with you. All the best for now, and have a pleasant and blessed Easter. Bye for now. Happy Easter to you. That's one. God's blessings, one. Thank you. Rolf, oh, I missed you. Yes, good to have you with us, Rolf. Terrific. Adrian also. Rob, God bless you, my friend. Exactly. We're locked down here. Bill, enjoyed that. I'll talk to you next week, Bill, about your other questions. I'll send you an email soon. Thanks for being with us, folks. All the best for now. Bye-bye.